Good morning, traders. It's Monday, March the 2nd. Taking a look at the charts, we've got the SP 500. Just want to recap on a couple of the positions that we've done here and why we need to stick with our stops. This is a perfect example of what's been unfolding over the last about week and a half and this huge volatility. And if you buy and hold positions, how they can really damage your account. And this is what our last trade that we got into. Let's just zoom in a little bit here. We got into the SSO play over here. We got up into this area. We took partial profits on our SSO, and then we moved our stop up to break even. And the market started to roll over, and we got stopped out as the market started to roll over. And you can see what happened there. We're still struggling. The equities market down another percent again today. It's stuck under this 5-day moving average. I think we're getting pretty close to a high volatility, big volatility bottom and some type of sharp rebound, but the trend is down. We're not looking to pick a bottom at this point. But the key here is that we bailed out of the position and the bottom fell out. Typically, we'd see the market trade sideways, then go higher. But this is a huge news-driven event, and we're seeing really huge liquidation happen last week. We saw margin calls forcing positions to get closed across the board in asset classes like gold, silver, miners, utilities, you name it. The safe havens got hammered simply because that's where a lot of money was moving. And when all their other positions go bad and they're forced to liquidate, the brokers will start closing all their trades, including their good ones. And we saw gold, silver miners just crash and utilities. So let's take a look over at our the GDXJ play real quick here. We got into GDXJ somewhere over here when the market was breaking out of a big pattern here. It was on the verge of a huge run. We had to hold it through a consolidation. It popped up. We got out at the open up here for almost a 10% gain, and then it moved down and we got stopped out at break even somewhere down here with the balance of our play. And you can see how it just completely collapsed and broke this low. Huge selling in that sector, in those equities, and that's why we got to get out of these plays, because now we've got an opportunity to let it build a base, potentially for us to get long again for what could be the big run that we're looking for this time. If we look over at our TLT play, TLT we got in somewhere right over here, just halfway through this trading session, and it's had a nice move up. It's up another percent or so today. It's up over 10 or 11% in our favor. We've scaled out profits as it's moved up. We've been moving our stop up as well, and eventually, obviously, this is going to reverse. We're starting to go pretty parabolic. We're getting some big gaps here. Typically, once we get into this type of price action, we start to see the market stall out and roll over. You can see as price goes parabolic, you start to get gaps to the upside, you get and sell-offs, and then we get another gap, and you get some upper wicks. And more or less, I think we're going to start to get into something like that over here. And of course, this is getting up to the point here where we actually will potentially close out our position if we hit that 15% gain. Bonds have a tendency to move about 15%, and then we can see them completely consolidate and do something like this. So we're pretty close to exiting the rest of our bond play, sitting heavy in cash and waiting for some new setups, because it's just the way the market tends to move. Now let's take a look over at bonds, or sorry, not bonds. Let's take a look over at gold here. Here's gold. You can see the big down bar on Friday. Looks like big margin calls hitting the commodity markets and just flooding it with sell orders, dropping the price. And we've seen that come back down. We're down to the 20-day moving average. I wouldn't be surprised we see this start to consolidate. Hopefully it doesn't form some type of bear flag and continue lower. But at this point, we're letting the market do its thing. And we'll be looking for some new setups in the precious metals sector going forward, because they are still technically in an uptrend and they're down near support, or at least gold is still in an uptrend. If we look at the other safe haven, which is utilities, I'm kind of bouncing all over the place this morning, but utilities have been leading the way. And of course, wherever a lot of money has been flowing, when margin calls hit, that's the market that's going to get really flooded with sell orders. And we're going to see it completely collapse. And that's what it's done. It's come all the way back down, huge volume on Friday. And more or less the market's cleansing itself. We saw a similar market crash like that over here. Not quite as big percentage-wise, but pretty darn close. Big, huge sell-off, and then from there it clawed its way, stabilized, and it continued to go higher. So overall, things got oversold with margin calls. We'll have to see how things go over the next session or two. If the market just trades sideways for a few days, this is the broad market in general, and continues to go lower, we're going to get hit with another wave of margin calls, and things could really collapse. Another big leg to the downside in the SP 500, in gold miners, you name it. Margin calls will pretty much make everything fall, other than bonds, which have been performing really well, and we continue to have a small position in bonds as it moves higher. Taking a look over at natural gas. Let me just zoom in a little bit here. Natural gas continues to be stuck under this 20-day, and there's some articles out talking about how really the coronavirus is really killing commodities demand, and of course natural gas is already struggling from that. It started to have that momentum reversal, but then we just got clobbered. It continues to move down. Either way, we're letting it do its thing here, and really with the coronavirus and all the disruptions it's causing, we don't really want to get involved too much, not to the long side at least, in commodities just yet. If we look over at crude, it's up 1.3% this morning. Oversold. It got all the way down to our 44, that 43, 44 area that we were talking about from way up here, this overall measured move, and it's starting to get a bounce there. It is under the 5-day, and we'll see how things play out here over next little while. Overall, this is a key support level, 43 to this 46, very similar to this here. We could see it consolidate, maybe start to form a bit of a bear flag and start to squeeze up and get stuck under the 20-day moving average somewhere over here, and it could potentially continue to go lower. I think we've got a downside target around 34 if it was to have a major break and continue this this trend to the downside. So this is a really significant level that if this low gets broken, we are headed potentially $10 a barrel lower going forward. Looking over at the VIX, let's take a look at the VIX real quick. VIX has been popping, and we talked about this last week a couple times. The weekly chart gives us a good visual of where the big volatility is on average. And if you take a look at the chart here, you can see, let me just even zoom back a little bit more. If you look at the price action, you can see we're into this upper range, these upper wicks going across the board here. Pretty significant level of fear, and when those levels are reached, we usually see the VIX fizzle back down. And we talked about how there's a few different ways that this can be played. It's a higher risk play, very volatile. You play with a very small percentage of your account, 1 to 5% max. More or less, you're shorting the VIXY, the VIXY, or shorting UVXY. More or less, they're a long VIX ETF, but they lose value over time the way they're designed. So if you were to short somewhere up into these and just hold on to them for several weeks, they can drop very substantially from 50 down to that 12 mark in price. So there's a lot of downside potential. Time really just is on our side for something to just continue to fizzle out, because this just loses value over time. If there is a huge spike, obviously there's potential for 100%, almost 100% drawdown on the small play, but again, they're very short-lived, and these type of fear levels are dissipated very quickly going forward. So that's where the risk is if we have another leg down in the market, the VIX is going to spike substantially higher, which is why you just need to play it with a very small position. It's type of play. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.